Hey gang, Uncle Doug here, dropping some mortgage knowledge. You do not have to get stuck into an interest-sucking, old-school, 30-year amortizing loan. There's a much more disruptive product out there that is designed to put you in control of your biggest asset, most likely, which is your home, and your biggest liability, which is your mortgage. This is a first position home equity line of credit, or HELOC, coupled with a very advanced checking account that has zero balance sweep technology. And what this is designed to do is save you big money in interest expense if you qualify. And not everyone's going to qualify. But if you do, there's nothing like it on the market. This has been around for 20 years. There's never been a default to my knowledge. It is now available in Australia, New Zealand, the United States, the UK, Canada, and Japan, I believe. So let's go through a really quick scenario. In many places, this would be a very expensive house. In California, this would be a starter home. So $1.2 million house, $960,000 loan balance. Let's say you have 20% down or 20% equity for a refinance. We're comparing this to a 30-year amortizing loan at 7%. Again, this is a home equity line of credit. Let's say you make $5,000 in net income that gets deposited weekly. So in this particular scenario, and each scenario is different, and those differences drive the results. So reach out to me. You can go to HomeSelect.com and you can play with the simulator yourself. There's a lot of videos there and learn more there. But we're going to assume that this person's depositing, like I said, $5,000 a week. And at the end of it all, they're saving 25% monthly in their checking account. And we're going to look at the results. So holy moly. So this client would actually pay off their loan in 10.5 years versus 30 years. They'll save $800,000 over an amortizing loan. You'll only make 126 payments versus 360. If we go to the summary, you're going to notice that on a minimum, because this can also be done as interest only if you want, you only have to pay $4,300 ballpark versus $6,400 in payments in the event that you want to go that route. It pays off 3 times as quickly as an amortizing loan. The comparative effective APR on this loan is 3.2%. All these people are yammering on right now about, rates, and I want 7%, or I want a 6%. How does 3.2 grab you? And I've seen one recently that we calculated for a woman in Los Angeles. She had a 1% comparative effective APR because she had so much discretionary money left over at the end of the month. And here's the amazing thing: is not only would you pay off that loan in 10 years, but you'll have the house paid off free and clear. You also have a $960,000 line of credit free and clear as well. This is black belt finance. If your loan officer hasn't told you about this, if your realtor hasn't told you about this, you need to reach out to me. Doug Waldman, you can Google my name, go to GoHomeSelect.com. You can find my information there. But let me walk you through your personal scenario and let's see how much you qualify for and benefit from this.